Hi, welcome to my channel and please don't forget to like, comment and subscribe. I want to tell you about definition of insurance and risk. Insurance is a form of risk control that is carried out by transferring risk from one party to another, in this case, an insurance company. What is the meaning of insurance? According to Article 246 of KUHD, it is stated that insurance or coverage is an agreement by which an insurer binds himself to an insured by receiving a premium to reimburse him for a damage or loss of expected profit that he may suffer due to an uncertain event. Another definition of insurance is a transfer of risk from the first party to another party. In the delegation, it is controlled by the rules of law and the application of a principle and teaching that are universally adopted by the first party and other parties. From an economic point of view, insurance means a collection of funds that can be used to cover or compensate people who suffer losses. What are the benefits of insurance? Apart from being a form of risk control financially, insurance also has various benefits which are classified into main function, secondary function, and additional function. The main function of insurance is a transfer risk, collect funds, and balance premiums. The secondary function of insurance is to stimulate business growth, prevent losses, control losses, have social benefits, and as savings. Meanwhile, the additional function of insurance is an investment fund and invisible earnings. And then the next is, what is the meaning of risk? According to Article 2.246 of the KUHD is stated that insurance or coverage is an agreement by which an insurer binds himself to an insured by receiving a premium to reimburse him for a damage or loss of expected profit that he may suffer due to an uncertain event. Another definition of insurance is a transfer of risk from first party to another party. In the delegation, it is controlled by the rules of law and the application of principle and teaching that are universally adopted by the first party and the other party. And then the next is from the economic perspective. Insurance means collection of funds that can be used to cover or compensate people who have suffered losses. And the next is, what is the definition of risk? The definition of risk in insurance is uncertainty about occurrence of an event that causes economic loss. So, what is risk? The definition of risk in insurance is uncertainty about the occurrence of an event that can cause economic loss. And then the next are, what are the forms of risk? The forms of risk include pure risk, speculative risk, particular risk, and fundamental risk. Pure risk is a risk that results in only two kinds, loss or break. Even for example, theft, accident or fire. Speculative risk is a risk result in three types: loss, profit, or break even. For example, gambling. Particular risk is the risk that comes from the individuals and the impact is local. For example, plane crash, car crash, and shipwreck. While fundamental risk is a risk that does not come from individuals and the impact is wide. For example, is hurricanes, earthquakes, and floods. And then next is all are risks insurable. Not all risks can be insured. The risks that can be insured are risks that can be measured in money. Homogeneous risks or the same risks are pretty much guaranteed by insurance. Pure risk or risk does not bring profit. Particular risks from individual sources, risks that occur suddenly or accidental. Or insurable interest. Insured has been interest is an object of coverage and risks that are not against the law. So, thank you for watching and don't forget to like, comment, and subscribe.